There are 7 bills you're paying right now that the law never actually required you to pay in full. This video is educational only, not legal or financial advice. Always confirm your exact numbers with a licensed professional. Now let's start with the one hiding in your tax return. Bill number 1 is your federal tax bill, and this year it got quietly smaller for a reason most tax preparers never explain out loud. If you're 65 or older, the government automatically increases your standard deduction, giving you an extra $2,000 of completely tax-free income if you're single. If you're married and you're both 65 or older, that number doubles to over $3,000 off the top. This sits right on top of your regular standard deduction, not instead of it. So it's not replacing anything you already had, it's adding to it. And unlike other retirement tax breaks, this senior bump never phases out, no matter what your retirement income looks like, meaning it applies in full whether you make $20,000 or $200,000. Ask your preparer directly 3 words, senior standard deduction, and watch their answer. Because should be applied and was applied are 2 very different sentences on a tax return. Once that's confirmed, there's a second deduction sitting 1 level down in your own state government, and this one nobody automatically checks for you at all. Bill number 2 is the tax your state charges on your Social Security check itself, and here's the number that surprises most people watching. 42 states, plus Washington, D.C., charge you nothing on that income, 0. If you live in one of those 42 states, your Social Security is already untouched, no form, no filing, it's simply the law where you live. But if you're in one of the states still taxing it, Colorado, Connecticut, Minnesota, Montana, New Mexico, Rhode Island, Utah, or Vermont, don't assume you're stuck. Every one of them still has an income cutoff that can erase the tax completely. Take Vermont as the worked example. If you're single with an income under $55,000, your Social Security is fully exempt there too. And if you're married filing jointly under $70,000, same result. New Mexico goes even further. Single filers under $100,000 pay nothing on their Social Security at the state level. The myth here is thinking your state's name on a still taxes it list means you personally owe something. Check your actual income against the cutoff before you accept that bill as final. And speaking of bills tied to where you live, your house is holding on to a number that's usually bigger than both of these combined. Bill number 3 is your property tax bill, and this is genuinely where the largest amount of unclaimed money hides. Every state offers some form of senior relief here, a reduction, a freeze, or in a few cases, close to a full exemption. In Texas, homeowners 65 and older can now shield up to $200,000 of their home's value from school district taxes alone. That's combining the general $140,000 exemption with the additional $60,000 senior exemption. In South Carolina, it's an extra $50,000 stacked on top of your regular homestead exemption, bringing the total to $100,000. In New York, the Enhanced Star program can knock $70,700 off your home's assessed value, as long as your income sits under $110,750, and that program uses a different income calculation than your 1040 does. 3 different states, 3 completely different numbers, and that tells you something important. This was never a national program. It's decided county by county, so the only figure that actually matters is the one where you live. And here's the myth to kill directly, thinking your retirement income disqualifies you. Many counties don't count Social Security as income at all in this specific calculation, which means the number on your tax return can be flatly misleading you about your own eligibility. Call your county assessor and ask them, in writing, what income actually counts toward this exemption, before you rule yourself out on a guess. Even after you claim this reduction, though, there's a second form sitting right next to it that most women never realize exists. Bill number 4 is the one that stops your property tax from climbing every year, even while your neighborhood's home values keep rising around you. It's called an assessment freeze, and it locks in your home's taxable value at today's number permanently or for a set renewable period. Illinois calls theirs the senior freeze, and depending on your income, it holds your equalized assessed value flat, so a hot housing market never turns into a surprise tax bill next spring. Arizona freezes it for 3 years at a time, renewable indefinitely, with an income limit around $47,700 for a single owner, $59,600 for a married couple. The mistake most women make is assuming a freeze and an exemption are the same filing and applying for only one. They're not the same thing, and in most counties you can stack both. Exemption first, freeze on top, which is exactly where the real long-term savings live. Now for the two that almost nobody talks about, because they're not automatic, and they require you to actually make a choice. If you're asset-rich and cash-poor, meaning the house is paid off but the bill still eats into your grocery budget every quarter, you can defer this year's property tax entirely rather than pay it. Vermont offers this at 0% interest, no cost at all for the postponement. Washington charges around 5% simple interest instead. To be direct with you, this is not free money. It's a loan against your home's equity, repaid when you sell or from your estate later. So this is a judgment call for your specific situation, not an automatic yes for everyone watching. And your pension follows you even into a state with no income tax at all, which surprises people, because the differences between states here are larger than most retirees expect. Illinois exempts everything: Social Security, pensions, and IRA withdrawals, every single dollar of it. Iowa does the same starting at age 55. Pennsylvania, Mississippi, and Alabama each specifically protect pension income from state tax. Consider two women with an identical $70,000 pension. One in Illinois pays 0 state tax on it. One in a state that fully taxes retirement income could lose several $1,000s a year on that same $70,000 for the exact same pension, the exact same work history. That's not about disqualifying yourself. It's simply about knowing this rule exists before you decide where to spend retirement. And now, the reason I asked you to stay until here. This is the one most women watching have genuinely never heard of. Bill number 7 is your Medicare premium, and specifically, a hidden surcharge called IRMAA. Think of IRMAA like a toll booth. The government looks at what you earned 2 years ago and charges you today's toll based on that old number, even if that income is completely gone now. For 2026, that surcharge starts around $1,148 a year per person, and at the highest tier, it climbs to nearly $6,936 a year per person, just for Medicare. Here's the worked example. A woman named Patricia retired last year. Her income from the year Medicare is using was $185,000 from when she was still working full-time. Her actual income this year is barely a fraction of that. There's a federal form, SSA-44, Medicare Income-Related Monthly Adjustment Amount, Life-Changing Event, and retirement itself qualifies as that event. File it with a letter from her former employer and her new income estimate, and Social Security recalculates her premium using this year's real number instead of the old one. Women who file this get refunded whatever they overpaid, and see their future premiums drop automatically going forward. That's your 7. Now 2 more, smaller in scope, but worth knowing if they apply to you specifically. If you live in one of the 13 states that still tax groceries at the register, Alabama, Mississippi, South Dakota, and Idaho among them, prescription medicine is exempt from sales tax in every single state in the country. No exceptions. That one's already automatic everywhere. Over-the-counter medicine is a different story. 10 states, including New York, Texas, Pennsylvania, and Virginia, exempt that too, which matters more than it sounds like it should. The average senior spends around $356 a year on over-the-counter medicine alone. And second, if your state happens to be one of the small handful offering it, a vehicle registration discount. Alaska waives the fee entirely on one vehicle for residents 65 and older. Illinois offers a $10 flat rate through its Benefit Access program if your income falls under roughly $33,500 for a single person. To be straightforward with you, most states don't offer this one at all. It's worth a 2-minute check on your state DMV site, but it isn't the headline item on this list. The property tax and Medicare items are. So let's add it up honestly, not dramatically. The federal deduction, the state Social Security exemption, the property tax reduction and its freeze, the deferral if your situation calls for it, the pension protection if you're choosing where to retire, the Medicare refund most people never file for, and the 2 smaller bonus items if your state happens to offer them. Individually, several of these look small enough to skip. Added together, across a 20-year retirement, women who claim even a handful of these are keeping $24,000 to $96,000 in their own hands, money that would have quietly gone somewhere else instead. You paid into this system for 40, 50 years of your working life. Claiming what you're legally owed isn't asking for a favor. It's collecting on a promise that was already made to you a long time ago. You don't need to do all of this today. Pick one, just one, the one that sounded the most like your exact situation, and make that call this week. And if this helped you see even one bill differently, send it to one woman in your life who needs to hear it too, your sister, your neighbor, the woman you sit next to at church. She's very likely overpaying on at least one of these right now, and she has no idea. These numbers update every single year, so if you want to know the moment next year's limits change, that's exactly what this channel exists to tell you.